A historic wealth transfer is beginning. The silver-to-gold ratio just crashed below 50. What does that mean for your savings, your portfolio, and your future? If you've been watching the markets, you know we're not in normal times anymore. Today, right here on Silver Shockwave, we're going to break down the moves that the big banks, hedge funds, and insiders don't want you to see. Stay with me, because what I'm about to show you could literally change how you think about money forever. Before we dive in, make sure to hit that like button and subscribe to Silver Shockwave if you want to stay ahead of the curve. We'll uncover the signals, the patterns, and the warnings that mainstream media won't tell you. All right, let's get into it. The first thing to understand is that markets are not random. Every move has a reason, and right now, the biggest players are orchestrating something massive. The silver-to-gold ratio has dropped below 50, something that hasn't happened in decades. Historically, this level signals one thing: money is shifting. And not just shifting, it's being pulled strategically from one asset into another, creating what insiders call a historic wealth transfer. You see, when major banks and hedge funds move this kind of money, it's not small, it's billions, sometimes trillions, sliding quietly behind the scenes. And they don't make mistakes. They plan, they calculate, and they anticipate market reactions down to the last detail. If you're holding silver or gold or thinking about investing, understanding this pattern isn't just smart, it's essential. Let me give you a snapshot of what's happening. The big banks have been quietly accumulating gold while using complex derivatives to manipulate silver pricing. Meanwhile, hedge funds are shorting silver in certain markets while buying gold in others. These moves create artificial pressure, driving the silver price lower temporarily. But it's not about crashing the market yet. It's about positioning themselves for an even bigger swing later. Now, insider signals are flashing. Large institutions are taking positions that the public can't see. Certain delivery reports on COMEX, massive off-exchange silver purchases, and unusual options activity are all pointing to one thing: a coordinated strategy to funnel wealth into gold and away from silver at the perfect moment. If you're just watching prices without this context, you're missing the story. And here's the kicker. This is happening while retail investors are distracted by headlines about inflation, interest rates, or short-term stock volatility. Meanwhile, the real wealth transfer is happening quietly, precisely where most people aren't looking. This is why Silver Shockwave exists, to show you the moves, the patterns, and the hidden signals before it's too late. You might be wondering, why does the silver-to-gold ratio matter so much? The ratio is essentially a measurement of value between the two metals. Historically, when it drops below 50, it signals that silver is undervalued relative to gold. That's exactly what we're seeing now. But here's the nuance. Large institutions are aware of this and are positioning accordingly. They quietly moving money in ways that amplify gains for themselves, while the public is left guessing. It's not just numbers on a screen, it's strategy, psychology, and timing. For example, we're seeing massive accumulation of physical silver in certain vaults, while futures markets are being used to suppress public silver pricing. Hedge funds and banks can buy at lower paper prices and then benefit when physical demand surges. This is classic market manipulation, but done at a scale most people can't even imagine. Now, if you're thinking this is complicated, don't worry. Let's simplify it. Imagine a seesaw. On one side, you have paper, silver, and hedge fund positions. On the other, you have physical silver and gold accumulation. The big players control the balance. When they want to push the seesaw in one direction, the price moves temporarily. When they're ready to flip it, the seesaw swings dramatically in. That's when the real wealth transfer occurs. For retail investors, timing is everything. Buying silver or gold without understanding the manipulations could leave you vulnerable. Watching these patterns on Silver Shockwave gives you the foresight to make smarter moves. And remember, it's not just about buying metal, it's about understanding the signals, reading the markets, and knowing when the transfer is about to accelerate. Another sign to watch is insider trading alerts. We've seen spikes in certain options, unusual large orders in gold futures, and movements in ETFs that indicate smart money is shifting assets quietly but decisively. These aren't random. These are signals that a bigger story is unfolding. And if you catch them early, it can mean the difference between being part of the wealth transfer or being left behind. Let's talk timing. The ratio dropping below 50 isn't just a number. It's a warning. Historically, every time we've seen this, a significant shift in wealth followed within months. And right now, all the pieces are in place. The banks are buying, the hedge funds are positioning, and insiders are moving. Meanwhile, retail investors are waiting for mainstream media to give the green light. That's a huge mistake. Silver Shockwave has tracked these moves, and we're seeing signals that suggest a major transfer is underway now. What does that mean for you? It means there's an opportunity, but only if you act strategically. Don't chase headlines. Don't follow hype. Watch the patterns, understand the flow, and use this knowledge to protect and grow your wealth. Now, I want to emphasize something important. This isn't just about profits. It's about understanding control. When money moves in these amounts, it affects currencies, interest rates, and even global economic stability. Watching and understanding these shifts isn't just financial insight, it's knowledge that can protect your lifestyle and your family's future. And here's something many miss: the narrative. Public media talks about inflation, tech stocks, or the next rate hike. They rarely focus on physical metals accumulation, COMEX delivery reports, or insider activity. That's why being tuned in to Silver Shockwave matters. We see what most can't, and we break it down in plain English, without fluff. As we approach the next few months, watch for accelerated movements. Gold will likely strengthen as silver remains suppressed temporarily. Big money is getting ready for a moment when physical demand catches up to their positions. This is the perfect storm for a historic wealth transfer. Retail investors who understand the signs will benefit. Those who don't will watch it happen from the sidelines. So, here's your action plan. First, educate yourself on the silver-to-gold ratio and understand historical trends. Second, monitor institutional accumulation, COMEX, ETFs, vault deliveries. Third, recognize insider signals like unusual options activity or block trades. And fourth, stay updated on Silver Shockwave for alerts, analysis, and context that mainstream sources simply won't provide. And finally, don't forget to like this video, subscribe to Silver Shockwave, and turn on notifications so you never miss critical updates. The wealth transfer is happening now, and timing is everything. Share this video with friends who need to understand what's coming. Drop a comment below with your thoughts or questions. I read every one, and I want to hear how you're preparing for this historic shift. Remember, markets aren't random. Every movement, every ratio, and every insider position tells a story. The silver-to-gold ratio, below 50 isn't just a number, it's a signal that history is in motion. Watch closely, stay informed, and take control of your financial destiny. Silver Shockwave is here to guide you through the chaos, uncover the manipulations, and help you make sense of it all. So like, comment, share, and stay tuned, because this is only the beginning of a wealth transfer that will define a generation.